Donald Trump pauses reciprocal tariffs for 90 days, unleashing a furious rally in stocks, but increases his tariff on China to 125% after China retaliated overnight with its own 84% tariff. The Reserve Bank of New Zealand cuts rates by 25 basis points as expected, as does the Reserve Bank of India. Meanwhile, the yen is attracting safe haven demand. That's coming up in our 5 Things in 5 Minutes on Thursday, April the 10th. And then in today's bonus deep dive interview, ANZ economist Sophia Ngala reviews how Australian states and territories performed at the end of last year compared to each other.
Only 2 states or territories performed above their long-run trend in the Q4 ANZ Statometer: Western Australia and Queensland.
But first, in 5 and 5 with ANZ, Donald Trump has just paused his reciprocal tariffs for 90 days, but has hiked the US tariff on imports from China to 125% after China retaliated overnight by lifting its tariff on US imports to 84%. US stocks jumped 7% after the pause was announced. The US 10-year bond yield fell from as high as 4.51% to 4.39% in late US trade. Here's ANZ's head of G3 Economics, Brian Martin, commenting before the Trump pause announcement on the dramas in the US bond markets yesterday and last night.
The US Treasury Secretary said that he sees no evidence of stress in the market and all that's happening is a natural deleveraging at the moment, and traders are reporting no evidence of stress. So I think what we are seeing is conflicting expectations now, which is leading to volatility between will weak growth dominate or will inflation concerns dominate? And it's going to take time for that to be resolved.
As of 4 a.m. Sydney-Melbourne time, the S&P 500 was up 7%, the Nasdaq up 10%. The US dollar index was flat, the Aussie dollar was up 3% to 61.43 US cents, and the Kiwi was up 1.9% to 56.40 US cents. Gold was up 3% to $3,084 an ounce, and West Texas oil futures were up 3.4% from the previous day to $61.65 a barrel, having earlier fallen as low as $55 a barrel in overnight trade. Number 2, the Reserve Bank of New Zealand delivered the expected 25 basis point cut to 3.5% in its official cash rate yesterday, amid speculation it might opt for an oversized move in response to the tariff turmoil. ANZ New Zealand chief economist Sharon Zollner says the Reserve Bank provided a degree of calm with its decision.
The direction of risks is clear, and they underline the fact that they are in a really good position to respond. Inflation is around the midpoint of their target. Most people would expect that this shock is going to reduce inflation in New Zealand on net, whereas the Federal Reserve in the US is potentially facing some quite unpleasant trade-offs. Given that the US has put on such large tariffs, there will be a little flurry of inflation there that the Fed might have to have in the back of their minds. Whereas for New Zealand, I think it's a lot simpler, and the Reserve Bank certainly sounded ready to act as required, but quite open-minded about how it's all going to pan out.
Number 3. Sharon says there was no indication in the record of meeting that a 50 basis point cut was considered.
I think there is signal in the fact that they didn't choose to stress the fact that they had considered a larger cut. Markets have already moved a long way and are now pricing the OCR to go well under 3%, and that in itself is actually easing monetary conditions. So I think the Reserve Bank will probably have that in the back of their minds as well, that if things do deteriorate, market pricing will respond, and so actually the market will do some of the Reserve Bank's work for it if necessary.
Number 4. The Reserve Bank of India cut rates by 25 basis points to 6.0% yesterday and took an accommodative stance, indicating more cuts are likely. ANZ economist Diraj Nim says the RBI lowered its 2025 inflation outlook to below its 4% target and also cut its growth forecast from 6.7% to 6.5%.
We broadly concur with their assessment on inflation, but we think they're quite optimistic on growth. And one of the reasons could be that they haven't really factored in the ample downside risks that emanate from the current global situation and the risks that tariffs and a potential global growth slowdown poses to India's growth as well. So from that viewpoint, we think there is considerable scope for the Reserve Bank of India to turn more dovish in the coming meetings. And we think that there are 2 more rate cuts on the cards.
Number 5. Japan's 40-year government bond yields hit a record high yesterday, partly as traders questioned whether rising economic risks would temper the Bank of Japan's rate rises. The yen has also been surging amid global tensions, hitting levels against the US dollar not seen since October last year. Here's ANZ FX analyst Felix Ryan.
A lot of that does come down to haven demand and all that uncertainty around the global economic outlook and the risks that tariffs pose to the global economic activity as well. So that has helped the yen, given that it's seen as a bit more a safe haven currency. So as long as we continue to see a persistence of uncertainty around the economic outlook and fairly risk-off sentiment, then that will be a supportive backdrop for the yen going forward.
Felix Ryan there. Now, in today's bonus deep dive interview, ANZ economist Sophia Angala analyses the economic performances of Australian states in the final quarter of 2024.
So only 2 states or territories performed above their long-run trend in the Q4 ANZ Statometer, and they were Western Australia and Queensland. Economic momentum decelerated for both those states in the quarter, but it's important to remember that this is a slowdown from a strong base. Looking back to the Q3 Statometer, both those states outperformed the rest of the nation, as they were the only 2 jurisdictions performing above their long-run trends and also saw an acceleration in economic momentum. Meanwhile, in Q4, all other states are performing at a level below its long-run average, but there is some improving momentum across most jurisdictions. So overall, mixed performances across the country.
Why did Queensland and Western Australia slow down?
In Q4, we saw signs of housing market cooling nationally, with housing prices flat across Australian capital cities in Q4, following quarterly growth of 1.5% in Q3. But while housing prices continue to rise in Perth and Brisbane, where housing price growth was particularly strong as demand outpaced supply, the pace of housing price growth has eased. So that slowdown in economic momentum in Queensland and Western Australia in Q4 was partly due to that slowdown in housing price growth. Particularly across all jurisdictions in the Q4 Statometer, Western Australia's index recorded the largest decline within its housing component, as housing price growth eased from quarterly growth of just over 5% in Q3 to 1.5% in Q4.
How are Victoria and New South Wales faring?
Both New South Wales and Victoria are performing below the long-run trend, but economic momentum was up in New South Wales. The state saw improvements in its trade, consumer and business sectors in Q4. Notably, NAB business conditions in New South Wales lifted compared to a national decline in Q4 based on the quarterly average basis. Meanwhile, the housing sector in the New South Wales index also recorded a large decline, as Sydney housing prices fell in Q4 following positive quarterly growth in Q3. In Victoria, economic momentum held steady, but this does follow an acceleration in Q3. Performance was mixed in Victoria's Statometer Index, with consumer, labour and the trade sectors recording a rise in Q4 in Victoria. Employment growth in Victoria through 2024 outpaced national growth over the same period. But the business and housing sectors in Victoria eased as housing prices in Melbourne fell in Q4.
So why is Tasmania so weak?
Tasmania is performing below its long-run trend. The state is the only jurisdiction in the Q4 Statometer to have all 5 of its sectors, so that's consumer, housing, business, trade and labour, perform below its long-run trend in Q4. Employment in the state declined in Q4 while it grew nationwide over the same period. Hobart's housing prices also fell in the year to Q4 versus a rise across all capital cities over the same period. But economic momentum accelerated in the state in Q4, and that was supported by an improvement in its business sector, as business conditions in Tasmania saw the largest improvement nationally in Q4, according to the NAB Business Survey.
Sophia Angala there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, April the 10th. Catch you tomorrow with more reaction to the latest tariff and markets news. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.